Hi and welcome back to the video. Today in this video I will explain some joint venture accounting related transaction. So let's start the video with some basic definitions. Now the recovery indicator. The recovery indicator is used to indicate whether the expense or revenue posted on the joint venture cost object is distributed to the joint venture partner or not. There are two most commonly used recovery indicator, and that are BI, which stands for billable posting. Any expense posted with this recovery indicator will always be processed by the cutback transaction, and it will distribute it to the joint venture partner and the operator. And the second is the NB, which is stored for the non-billable posting. So any expense or revenue posted with this recovery indicator will not be processed by the cutback transaction, means it will fully own or bear by the operator. So there are many other recovery indicator that we will see, and I'll explain you in the upcoming videos for the joint venture transactions. Now the billing indicator. The billing indicator are assigned to the billable posting and is used to identify the type of the posting, like cash call, normal expenditure or audit adjustment for the joint venture partner, that is later used to create the billing statement to the joint venture partner. Billing indicator are defined on the client level, means that it can be used by the multiple company codes. We define the billing indicator in the SAP joint venture accounting configuration. There are standard or pre-configured billing indicator that is delivered by the SAP when we activate the joint venture accounting. But if you want, you can customize the billing indicator as per your requirement or need. Now the recovery indicator manipulation rule. The recovery indicator manipulation rules allow you to define the rules that indicate how the recovery indicator for the sender and receiver record should be determined, resulting from the settlement or the allocation transaction. Now the cash call. The cash call are the advance cash request by the operator from the joint venture partner to manage the joint venture related activities. As an operator, the company requests for the cash from the joint venture partners, and as a non-operator, the company receives the request from the operator to pay the cash in advance. Now the PCO, which stands for the parent company overhead. In an international region, the operators are allowed to charge the percentage of the expenditure incurred by them to be recovered from the joint venture partners. These percentage expenditure are charged based on the sliding scale, and it's debited to the operated venture with the recovery indicator BI, means that it will be further distributed by the cutback transaction between the operator and the joint venture partner, and it's credited to the corporate venture, or you can credit it to the operated venture with the recovery indicator NB, means that the credit line will not be processed or distributed by the cutback transaction to the joint venture partner and the operator. The PCO will be charged on the billable postings only. Now the cutback. At the end of the accounting period, all the billable posting or expenditure posted with the recovery indicator BI on the operated joint venture will be distributed between the operator and the non-operated partner. This process is called the cutback. The cutback will be done on the billable posting only. Now the partner netting. Partner netting is also one of the period end transaction that will be executed after the cutback. It will clear all the posting on the joint venture business partner that are done through the special GL indicator like JKNL. Now the extract billing ledger. Extract billing ledger is also one of the period end transaction that is performed in the SAP joint venture accounting. This transaction extracts the data from the AC DOCA table and updates them into the JVPX01 and JVPX02 table, which is a joint venture accounting table, and which are later used to create the JIB statement. The extract billing ledger transaction is only performed on the operated joint venture. Now, the extract expenditure detail. This is also one of the period end transaction that will be performed in the SAP joint venture accounting. It extracts the data from the AC DOCA table and update into the JVBX03 table, which is the SAP joint venture accounting table, along with the assignment of JIB codes that are maintained in the cost object master data. The JIB codes are used to group or classify the similar nature of expenses on the joint venture. What? Don't worry, I'll explain all of these with the help of business example in my upcoming videos, and also I'll show you how to perform these transactions on SAP S/4HANA screen. Thank you for watching the video. Hope you found this video informative. Please do like and share this video. Also stay connected and subscribe the channel for the upcoming videos on the related topic, that is SAP joint venture accounting. Till then, goodbye and happy SAP.